welcome everyone. Good morning, good afternoon, good evening from any part of the world that you are watching us. We bring you yet another episode of Fintech Pioneers, where we bring the real Fintech voices from ground, talking to us about the future of Fintech, what really matters, and what really needs to be done next to make a difference to this world. On that note, we have Daniel today with us from Koho, who is one of the leaders in this particular profession and who has built an amazing fintech. And he's going to tell us more about himself. So, Daniel, welcome to Fintech Pioneers. If we can, please start with a brief introduction from you.
Sure. Thank you so much for having me. So the CEO and founder of a company called Koho. Koho is what's called the Challenger Bank. We're the leading challenger bank in Canada. For that challenger bank, things means different things in different markets. And what it means in Canada is we partner with the bank to hold the deposits, and we, it's a bit of an oversimplification, but do everything else. Koho is, we've raised about $130 million, been in market since 2017, and yeah, very, very much in scale mode as a company now. So really happy to be here. Thank you for having me.
Thank you. So Daniel, tell us a bit more about personally yourself. Are you a technologist? Are you a banker, consultant?
Yeah.
And how did you end up here?
Yeah, great, good question. So I went to school in Calgary, and those who are familiar with Calgary know that the primary business there is the tar sands or the oil sands. And coming out of university, that just didn't seem that relevant or interesting to me. So I cut the other way and co-founded a wind energy company. And we were building sort of decentralized wind turbines all across Saskatchewan and central Canada. And then in that process, got into industrial scale wind farm development, built a couple wind farms that were ultimately, where the energy would be purchased by the government of Saskatchewan. That was about $50 million in CapEx. And basically took those up to the point of construction. And then that company was subsequently acquired by a mid-cap publicly traded energy company called Algonquin Power. In doing that, I think two things fell out for me. One, I think it broke the veil a little bit on big companies. And when you're just kind of getting started, or, big companies seem like these fairly impenetrable machines. And when we were doing that, we just found more and more opportunity, and we're shocked at all the opportunity and what we felt like was a fairly kind of entrenched industry. And so that was kind of thing one. And then the more important outcome was after selling that company, I had a little bit of capital, started asking questions like, what do folks do with capital? Because I had no real experience. I think most people don't. And I think pretty quickly landed on the idea that the financial products that we use are some of the most like asymmetrical decisions that we make, and that it takes just as much work to get into a great financial product as it does a bad one. And it's our belief that bad ones are pretty standard and pretty corrosive to a lot of quality of life dimensions. And in Canada, we have 6 banks that have 95% of the assets and 95% of the AUM. It's one of the most heavily centralized banking oligopolies in the world, and you get a lot of natural market outcomes from something like that, where the products that folks have, especially those in kind of the lower middle income brackets, are not nearly as good as they could be, or not nearly as good as they should be. And so, that's kind of was very much the catalyzing insight for Koho. And then, I ended up looking at my mom's investment portfolio. She was in a lot of these bad financial products. And so it kind of put me on a bit of a path to say, well, how do we do two things? How do we give everybody a great financial foundation? How do we democratize access to the best financial products?
If I understand correctly, you're primarily looking at customizing a real solution for individuals. And at the same time, you're also going more on the path of deeper financial inclusion rather than just the basic service that typically people get if they are not necessarily targeted as a premium clients of the bank. Would that be a correct way of looking at the segment that you're targeting?
I think so. I think if you think about how a traditional bank operates, and you think about especially folks lower and middle income, there is a technology stack and an infrastructure stack, and frankly, a cultural inertia, which creates a lot of misalignment between those two, right? And banks lose money and treat primary accounts as loss leaders, predicated on the idea that they can cross-sell these folks later. And that's a function of banks' cost and technical infrastructure. They don't need to be loss leaders. And so our belief is we can operate these core accounts. We don't have to charge fees. We can do everything a bank does. And if we can, make healthy margin on those accounts, then we inoculate the business from having to sell people products that they may not need. And while that's a wonderful, important part of the business, it's also, I think, a hugely defensible way to build a business at scale. And so, we talk a lot about how do we create like long-term positive sum alignment with our users, and how do we amplify humanity, and a bunch of things that it's like really hard for a bank to think about.
Look, I have to at the same time say it's very pleasing to hear a fintech talking long-term value addition. Most of the times we end up talking to a number of fintechs that we see in the market who are pretty much focused on short-term gain. But you hit the nail on the, you hit the hammer on the nail to say that exactly unit economics matter. And in long run, value creation is what makes a sustainable business. Yeah. And that's what we need. Now, fantastic. Daniel, but the digital space, the fintech space is also getting a lot overcrowded these days. Number of players are coming every day, popping up almost every day, and there are a lot of incubation center. So how do you see that wave coming? And does that bother you, not bother you, or what's happening from that regards?
Yeah, I think I would say it is. So if I was going to kind of like broadly oversimplify the fintech narrative, I think we saw version 1 of fintech was direct B2C consumer products doing very niche things, peer-to-peer lending, whatever like those things were. And then I think layer 2 of this conversation, which is where we are today, is this rebundling narrative, but fintechs are now offering 5, 6, 7, 10 financial products to users. I think Koho's total product count is 5 today. And that makes a lot of sense. And then I think layer 3 is actually operating a lot more and more of the deep stack infrastructure. There is real and sustainable utility to the ability to take deposits and to the ability to directly interconnect to payments gateways. And there's a regulatory price for that, but regulators are responding as well. And so, I think it's, so to answer your question, I think it's a wonderful thing that there's all these fintechs, because I think I'm just a believer in markets. And I think that, it makes the banks better, the banks make the fintechs better, and ultimately the customer wins as an outcome of that. I think that there will naturally be a consolidation as folks either make that next leap to like being a full infrastructure player, and this is what's going to be answered is, are you a full infrastructure player who's sustainable and long-term, or are you a brand? Because what used to be really hard in starting a neobank or challenger bank or a trading advisor, or a direct deposit switching accounts, like fintechs are solving all of these things, both for fintechs and for banks. And so the brand play is fairly de minimis now, because there's no actually way that you can outcompete. And so the next dimension of competition, I believe, is at an infrastructure level.
Fantastic. But Daniel, help me understand, the incumbent banks, initially a few years back, there was this wave of, which we call a classic cycle. First you neglect, then you deny, then you accept, and then you just collaborate. Where do you see the incumbent banks are in this entire wave, right? And how do you see the future with banks? I do not see, at least, that fintechs will replace the bank, but there exists a model of coexistence. But how do you see that coming, and when do you see that happening?
Yeah. So I think it's an oversimplification that folks have, and it's like banks versus fintechs. But the truth is, there's banks that are supportive of fintechs. There's banks that are competitive. Even within these banks, they're not monoliths, right? There's folks who are super risk on and innovative within the banks, and then and so to me, like, I step back and I bet on incentives, and I think a lot of banks are asleep at the wheel still, because I think, and I think there's exceptions to that, for sure. I think there's lots of banks who are doing interesting things. And I think if you play the tape forward, 10, 15, 20 years, it is like this notion of a fintech versus a bank, is that these definitions aren't going to mean anything, right? Banks are trying to become fintechs, fintechs are trying to become banks. The other thing I should say is, it very much depends on geos. And it very much depends on market dimensions within those geos. I think we're seeing that there is domestic winners in this space and domestic responses from banks. And even within Canada, there's 6 banks and they all have unique responses to this kind of stuff. So, but long term, I think that the term fintech will go away because it'll just be synonymous with bank and vice versa, unless you're talking sort of Web3 decentralized type stuff, which is another interesting overlay to all this, obviously.
But then, Daniel, help me this. If you were to paint a future as a futurist, right?
Yeah.
What is the future? 10 years down the line, if I'm a consumer, what would it be different than what it is today? Right? So example, 10 years back, I used to walk in a branch and now I do all my banking on a phone. So what changes in next 10 years?
Yeah, so I think short, medium term, you will see fintechs be the largest financial like the largest market cap companies in the world, in the financial sector, I should say. I think we become bigger than banks, and then I think there's 2 other kind of dimensions. I think where the decentralized finance world makes a whole lot of sense is right now in developing countries and in international use cases, because I think the price, like the trust tax in those areas is really high. And so I think that in those geos and in those use cases, banks have less and less of a role to play. And then I think kind of longer term, I think like for most of us, your banking should be a perfect banking experience would be completely hidden, assuming you had the solvency and you're like, and there's no advantage. Every time I have to open, and Koho users open the app 30 times a month, and we do all this great stuff to help them save and all those kinds of things, that should effectively go to zero, right? Banks and we shouldn't have to manage our money on a daily basis. And I think that will happen in the next 10 to 15 years. Like, one of the things that we talk about today, which is crazy, is in Canada, 2/3 of the country is living paycheck to paycheck. And it takes 2 weeks from the time that you work to the time that you collect and receive that benefit. And so Koho is super focused on this dimension of like speed, but how do we just remove latency from the ecosystem? And so, you will be getting paid real time in decreasing increments of time every day, every minute, every second. And you will have less and less insight because you'll need less and less insight into your daily financial situation.
Right. So Daniel, with tech also comes a challenge, right? Security, privacy, and frauds. And how do you see that getting addressed? Because that continues to be some of the biggest concerns that banks have, regulators have. How secure is the tech? Right? Yeah. There's an AML, but there's also an element of cyber. There's also an element of privacy.
Sure. So
it would be good if you can give some example of how you at Koho manage that.
Yeah. So I think I always like, and I had a call with we're working on some Canadian regulation now, and I had a call with some folks last week on this. Very often innovation is seen as is seen in competition with systemic security or risk security or cyber security. And in my experience, it is completely the opposite. And the way that I would think about this is across a couple of dimensions. There is some amount of risk baked into the existing infrastructure, and there is regular and consistent data breaches with large financial institutions today. It seems like once every 2 years, there's a major one in Canada. And so let's not price in, let's not assume that we're starting from zero here on financial risk. Cyber criminals will innovate and they will find new dimensions, so I think the only answer to criminal innovation is, let's call it white hat innovation, right? And so that requires an ecosystem, and that requires continuing to support competition so that we can have some of these winners and losers. Now, that doesn't mean that there will clearly be fintechs who get this wrong, and that is a price that we're going to pay, but that's going to happen whether we support kind of innovation or not. So, I think you have to break it up into its component parts of like systemic risk, i.e. user capital at risk, and then reputational risk and data risk and those kinds of different things. But But I think like a lot of fintechs, we are not anti-regulation or anti any of it. We recognize that how important trust is, just like the banks do. And so, what we really look for on all of these kinds of things is just clarity that we can build against. And then it's our job to find the opportunities within that. And so what often happens in these conversations is you end up in these notions of like risk versus innovation, and you end up in kind of gray areas, and that's much more difficult because it makes it harder to raise capital, and it makes it harder to have a defined strategy and all those kinds of things. So, but today, Koho's regulated by two separate regulatory bodies. We have risk committees, audit committees, you name it. And we try and do our homework because we recognize that like we have a magnifying glass on us from a trust perspective.
Then what are the real challenges for fintech like yours and globally in today's world? That would be one. And while you address the challenges, one of the key things I would want to understand is the problem you are trying to solve in Canada is pretty much a universal problem globally. So how do you intend to address it beyond Canada as well at some point?
Yeah, I'll take the second one first. So, we're the largest in the space and have a pretty substantial market lead in Canada. And so we think there's a pretty high opportunity cost for distraction. And so we are very focused on winning Canada in the next kind of couple of years, and we're not going anywhere else. Canada has a lot of unique things that make this market, that make a lot of the stuff we've built, I think, defensible and relevant. Then, what's interesting is as I play the tape forward in the international space, I think we're going to see like a fragmentation of banking models. I think we're already seeing that with El Salvador operating on Bitcoin but a very much a domestic fragmentation. Because if you zoomed out 5 or 10 years ago, largely every country would kind of look the same from a banking perspective, in terms of the trust-based model and how things work. And now we have this massive competitive dimension with respect to decentralized finance, and a lot of developing nations are just going to skip the traditional bank trust type infrastructure. And so what I think is super, what we talk about at Koho is there going to be global trillion-dollar financial brands, which I think there probably will be. But I guess like the root question that we have is what role does domestic ownership play in these developing geos? Because if you look at Canada and you have a foreign controlled board, what you can do as a bank is very different than what you can do as a domestically controlled board.
Right.
And so we think about that a lot. Does that mean that the trillion-dollar companies will have minority positions in 30 geos around the world? Or is that one global brand that is operating in the domestic geos that are that it's available to? Or is it skipped all of these dimensions entirely and just gone decentralized finance? And, but I think we have a point of view on that, which is that domestic ownership matters and bank stacks matter, and that we're going to have a real good look at that, but we're not ready as an organization yet.
Okay.
And now I'm sorry. Go ahead.
Yeah, challenges.
Yeah,
like yours today.
Yeah. So I think the very simple challenge is distribution. And this is like for fintechs. They're almost always delivering better products than the incumbents, but distribution, especially when folks already have a pretty good product, is really hard. And so, the classic narrative is, can banks innovate before fintechs can reach scale? And scale is a function of distribution. So, I think we're seeing cost of acquisition go up in the United States as the space gets crowded. We're actually seeing our cost of acquisition come down in Canada because I think we're winning on a few key dimensions. And I think that, you're going to see, so what I would suspect is you're going to see unique partnerships because people will need basically like CAC inflationary hedges, right? Places where you can access customers in unique ways, in relevant use cases that basically embed a fintech account or fintech usage profile. Because the notion of like, paying $45 for a click on Google just doesn't work when everybody's product looks relatively identical.
So Daniel, last question. Number of young people are aspiring to be entrepreneurs. Number of people who are in industry are also aspiring to be entrepreneurs. What's your suggestion for them? What do you think they should keep in mind if they aspire to be an entrepreneur like you in the world of fintech?
Yeah. So two things. Just start. The amount of people that are looking for a perfect, I think people have an intuition that like there's eureka moments, but my belief is the draw that what the work that you're doing has on you is earned. It's not like born. And so I'm in for Koho for 6.5 years at this point, and like I mean, I'm probably being unfair, but there's like a sunk cost component to this, but there's mostly just like a you know, I feel I care very deeply about this problem, and the longer that I've cared about it, like the more that I want to see it come to life. And so if anything, my passion has gone up over time. And so there's just a function of just starting, and once you get closer and closer to the problem, you find opportunities and wedges within it. And I think a lot of people have bad intuitions about kind of eureka moments. I think thing two that I would say is there's a ton of macro uncertainty and internal and micro uncertainty when you're starting a business like this. The outcome might work, it might not, and you could do everything right and it could not work, and you could do nothing right and it could work. And like there's a whole distribution of outcomes. The only thing that you can control is like, do you care deeply about the thing that you're trying to solve? And the reason that I say that that's so important is like, one, because for me, it was a hedge on being able to look back on whatever happened with Koho and feel good about the work that I'd done. And two, it's going to help me outcompete the folks who kind of just see this as opportunistic, right? And if you're only looking at the problem as something that's opportunistic, you will get outcompeted by people who care about it, by the people who are staring at their ceiling at night, and the people who think about it in the shower, whatever that stuff is. Like, you know, there's both like a how hard can I push on this problem and a how hard does this problem pull me? And I think that folks who, you know, don't find something that they care about deeply will be at an operational disadvantage.
Great. And with that, we come to an end to this interview. Thank you so much for your time. Truly enjoyed it. Very honest, and I must say you have amazing clarity.
Well, thank you.
That's quite unique, and absolutely enjoyed having this conversation. Thank you so much for joining today.